right. Greed works.
Hello everyone, and welcome to episode 10 of Let's Play Wall Street Raider. I am RakeM, your host. We're coming back off of kind of a rough year. All last episode we suffered a series of setbacks. We have a major trade war going on. Royal Dutch Shell. It was in Royal Dutch with the U.S. Environmental Protection Agency, or whoever it is that regulates shipping, and had to invest and retrofit its fleet with double hulls to prevent any kind of natural or unnatural disaster of oil spills and whatnot. That cost us over $100 billion. But we rebounded nicely through the end of the episode, finishing with a profit of somewhere around $3 trillion. Most of that was due to the bank's ongoing interest rate swaps, as you know. We have Nippon, which has recovered from a dip in its earnings due to the demand pretty much evaporating out of its industry. So we had it spend some of its excess cash on other stocks in the same industry. We had STI buy China Mobile to 19% of China Mobile and contribute it to Nippon. And the more we contribute to Nippon, the higher our stock price needs to be when we sell it in order to make a decent profit. We've been holding on to it for quite a while now, much longer than is typical for any kind of company that I would invest in. I try typically to get in and out of a stock within 2 years, 3 at the most. And we are approaching 2.5, maybe 3 years on it. I don't want to put any more money into Nippon. I want it to grow on its own at this point going forward. It just had its earnings report. Well, let's go to Nippon. And earnings were up. And earnings are supposed to be up again. You know, it has a little bit of cash, but not a lot. So what I want to do with the oil price low right now is have it go ahead and speculate in spot crude. And if it can generate its own cash flow above and beyond what it's already doing, so much the better, because that will increase its net value, and the premium will simply add on top of that. So I'm going to have it invest in some in crude oil. So let's see. That's not the right button. Trade futures, crude oil, buy. And we're going to go ahead and buy the max, even though it's going to put us in debt to do so. I think we'll be able to afford the first 2 sets of transactions, but after that we're going to have to borrow. But we won't have to borrow that much, and we can repay it next quarter. Provided oil goes up, of course. All right, and because I have my own personal stake in crude oil, I feel okay doing this. If I didn't have my own investment in crude oil, I wouldn't want to do this without also doing it myself. All right, is that 5? That's 5. All right, so whenever I see my cash taking a dip, because my cash is always right in front of me, and so I'm always looking at it. If it starts to fall, I know immediately to start looking at my commodities. And if I feel it's time to sell for me, I would also do the same for the companies that I own. There wasn't really much else to talk about from last episode. We still have Royal Dutch, we still have SunTrust, we still have Nippon. We didn't make any changes of ownership. We added some additional assets into Royal Dutch as far as buying up some other companies, and a couple, I think 1 or 2 went broke, and we added them in, whatever was left of them. But I don't think we really froze any loans or did anything major. We just adjusted our growth rates to deal with the crisis that we're undergoing with the trade war, which has knocked the GDP growth down to -6. It was all the way up to, or down to -10 before. So we're making a slight discovery, and we hope within the next 6 months that the war will be over and we can return to some more moderate growth rather than all this turmoil that's going on. So anyway, the next earnings report that we're expecting is the bank, and it'll come up on January 4th. So we're going to turn the ticker on. Right now the interest rate is tightening. We're already at 8%. It would be nice if they tightened it some more and we could do some more interest rate swaps, because we're down to like 400 or so now. And it would be nice to run that back up to 950 of those agreements. If we don't get to it this year or next year, I'm going to be disappointed, because the ones that we have expire in the third quarter of 2023. The first set, and then the second set expires in the first quarter of 2024. So we're coming down to the end of these agreements. We got like a year and a half left, 2 years max. So I really would like to have that driven back, that total number of agreements driven back up by the end of next year. All right, so let's turn the ticker on, and there's not much to do unless, these numbers start going funky, but I'm going to fast forward now to January 4th unless I have a reason to come back before then. Alright, so SunTrust has made another $5 a share, and it's going to have some money to put somewhere, and we need to bring these totals back up to be in line with the business loan size. So I have 418, subtract that from here, and that's 327, I think. So let's put 100 billion in each one of those, and on the consumer loans, let's make it 129. All right, and we're going to do prime and subprime 80-20. All right, so we're getting close there. We still have 100 billion surplus. All right. So up next is Royal Dutch. And Chiron has gone broke, but we don't want it, so we're just going to sell it. It's only 166 million, doesn't amount to anything in terms of our portfolio. I'm going to check on my commodities real quick. Oil's going down. We did corn at 888. We shorted it. It's down to 5. I'd like that to get down to 4. Would even be nice if it got down to 3 before we had to cover it. if silver gets down again, it was down to 14.17 this month. I mean, this has just been so volatile. We got all the way down to 14 right here, and then shooting back up again. I meant to have 5 of those, and I missed it. Missed my opportunity. I thought I had 5, but I didn't. So when I saw it at 14.17, I thought, well, I can add that 5th one. And I was just waiting for it to drop below 14, like at 13.98 or something. But instead, no, it shoots back up. Okay, so Royal Dutch is recovering from its major sinkhole quarter. So we made 257 where we lost 625 last quarter. And we've got a nice surplus to put towards our debt. Wow, we had this much left over after repaying 27 billion or 26 billion. That's pretty good. We must be. Let's look at the industry. We're growing at 1%. Here it is. He finally started coming down. So negative 2%. He was growing at 53%. So that's making a big difference right there. And he's dropped his R&D too, so we can drop ours. Looks like this guy down here is the biggest with 8. So let's drop ours to 6. What are we rated at? Very capable. So let's drop our R&D to 6. And our growth rate is 0, isn't it? 1. So let's drop our growth rate to 0. Alright. We don't have a dividend. And look at that. It propped us right up to 13%. So we could... is there any other companies we can scoop up that have fallen? Doesn't look like it. All these others are either fully owned or mostly owned by other companies. So let's pay our debt down. And I bet that income is from the commodities. Well, some of it is. All right, what's our estimate? $1.68. So it's still falling. I mean, it's better than a negative, but still, because I mean, here's the number we really have to beat. Just the volatility is just crazy right now because of all the junk that's going on in the markets, the trade agreements and everything. Long term is 5%, short term negative 10. So you might ask why I'm not growing at a negative, and the reason why is because we don't have to. We're making a profit, and everybody else is slimming down, so we don't have to slim down. You know, the only reason to slim down is if you're losing money. Until then, I let everybody else slim down. Now, when the market is up, you know, this demand is growing, you know, then you'll notice that I don't typically grow as big as everybody else unless the supply-demand situation is still improving. And I talked about last episode an Adam style. What I mean is Adam Smith. And I'm going to put some links in the description so that you can read up on who Adam Smith is if you don't know. Basically, he's what they call him, the father of modern economy, or what is it? Economic theory. That's it. The father of modern economic theory. But you can read up on him. But basically, we're trying to help ourselves, but the way we play helps everyone else at the same time. So typically what I do is when I get big enough and I have enough cash, I will buy a stake in every company in my industry, so that as I'm helping myself and helping them, I profit from it as more than just my assets. I profit off of theirs as well. So anyway, we haven't really done that up to this point because we haven't had the money to do it, but we're going to be starting to do that here in the future because we're going to have more money than we can invest in business assets. And so the way to continue to grow would be to invest in stocks. And the way I do it is in similar industries, in the same industry as the companies I'm invested in. Since I'm improving the overall health of the industry, I might as well profit the maximum amount. All right, so our Royal Dutch is doing just fine. I mean, it's okay. There's nothing else that we need to do there. We just got to hope that this GDP keeps growing. And all those losses have resulted in major tax loss carryovers. So we shouldn't have to pay tax for a while. So when we recover, we should be able to come back strong. And silver is going way up, so my cash is going way up. Man, look at that rate. 9% all the way down to, I think it got up to 10 and a quarter, and now it's at 7.75. It's still tightening, right? It's just crazy. These numbers are all over the place right now. The next one up is Nippon, and we need to figure out what our target price is now. So let's go to tax basis report. 495, 138 times 5, and I think he has 10 billion shares. No, 1 billion shares. $24.75, pretty much the ballpark I said I thought it would be. $24.75, and we're currently at 1100. I don't think we're going to get all the way up there unless these commodities give us a significant infusion of cash. If they do, that's good in terms of our overall net worth will climb, but we need to find a place to put that money to work so that our earnings, our return on capital assets, this number, return on equity, doesn't get us down to the bottom of the list, because the higher we are on this list, the more of a price bump we'll get. So right now we're right here, 13.8. And actually that's not bad. 15 is what I strive for. So anyway, for what it's worth, their earnings report comes up here in just a couple of days, and silver is back down again. All right, looks like corn is dropping down to below 4. Yeah, we have it at 8, and it's down under 4. So we're going to want to try to sell that at around $3. So keep an eye on it. Oh, I got something up. Oh, I didn't close this. All right, 1581. Nice increase. Got money left over after we paid on our loan. And we're supposed to hold steady in the $15 range. No, this hasn't been updated yet. Let's let it run for a day. Now let's look. 1581 is what we made in 1588, so it is going to hold in the same general range. As long as we stay above 15, that's fine. We can go down to 15 even if it wants to. I don't care. As long as we beat this total from last year. It would be nice if it went up, a few pennies each time, but we can have one that falls short. So if this goes up, back up to 140, I'd be a very happy man. Alright, so he climbed back up to 4.25. Gold is past 2,000 now. If that gets up to 2,400, we're going to short it. Alright, keep dropping. 392. If it falls below 350, we'll probably cover it. And then buy. Turn right around and buy it. Alright. Oil production is no longer able to keep up with demand. Difficult times ahead for the world economy as world oil production reaches Hubbert's peak. Economists and representatives of OPEC held a joint news conference to announce to the world the bad news that global oil production has begun to decline and is no longer able to meet demand at anywhere near current crude oil prices. Well, I guess this means we're going to have a nice spike in price. As the world's population and demand for energy continues to grow and OPEC and other oil producers have reached and passed their maximum levels of production at 95 million barrels of oil per day, the future looks grim indeed. Energy prices are certain to soar as the gap between demand and available supply continues to grow. This peak oil scenario, sometimes referred to in recent years as Hubbert's Peak, was predicted back in 1956 by a brilliant oil geologist, M. King Hubbert, who correctly predicted that U.S. oil production would peak and begin to decline by 1970, which it did in 1971. He also predicted that world oil production would reach its peak in 1995, and that probably would have occurred had it not been for the political oil shocks of the 1970s, which slowed consumption and thus delayed the inevitable for a considerable number of years until now in 2022. To compound the day's bad news, the oil minister of the new government of Saudi Arabia announced at the same press conference that remaining Saudi oil reserves are actually less than a third of what the previous Saudi government has been telling the world since the late 1980s, when the Saudi oil ministry arbitrarily decided their reserves were twice what they had been reporting prior to that time. This crisis is not news to the powers that be, but almost no planning has been done to delay or mitigate the problems that lay ahead, now that peak oil has finally reached the summit. The CIA studied the peak oil situation as far back as 1977, and a report by the U.S. Energy Department back in 2005 stated, "The world has never faced a problem like this. Without massive mitigation more than a decade before the fact, the problem will be pervasive and will not be temporary. Previous energy transitions were gradual and evolutionary. Oil peaking will be abrupt and revolutionary." Okay, so we're going to have a huge spike in oil prices, which comes at a great time for us. And we should have huge profits at Royal Dutch. So we can beat the curve. Oh good, adhere to a strict money policy. So we may be able to do some interest rate swaps. Please, please, please let it be so. Let's go over to Royal Dutch. Holy cow, look at all that cash. Crude has jumped all the way up to 200. Look at my cash. Wow. Went from 40 to 200. Look at that. Woo! All the way up to 200. That is off the charts nuts. Wow. I wonder if that's going to go higher. I mean, I don't know. Is this really a limit? Will the graph go higher if the price goes above it? Or will it just go off scale, or does it actually have a hard limit on this price? I don't know. I'm kind of curious to see. I don't know that I've ever... I mean, I certainly haven't had this scenario happen in this version of the game. But it's been a while since I've seen this scenario happen in any of the older versions, and I don't remember what it got up to. I know I've seen it above 200 before, but I don't remember ever going over 240. So I'm tempted to just cover all my positions right this minute and short crude. But I'm going to take a risk and let the simulation run till April 4th and see what it does. All right, we're down to 387 on corn, so I'm going to be mainly watching this, but I'll try to look at the corn at the same time. All right, let's see. Nippon's up next on the 18th, I think. So let's just run it to then, because it'll pause. Oh wait, we got something open. All right. So let's run it to the 18th and just keep an eye on that. $369. Yep, 201. It got up above 200. Oh, it's on the 20th that they're reporting. No, this is EMC. When does Nippon come out? Oh, May 18th. Man, I can't read dates at all. So the next one that comes up is the bank. You know, and the bank's got a whole bunch of cash too, because we all bank with it. So my cash total is right there. And it's offset by CDs, which I get interest on. That's where that 1% comes from. Okay, let's go ahead and run. We're going to keep it slow so that we can watch these prices. We're not going to fast forward. Doesn't look like it's going anywhere now that it's hit 200. So let's cover our positions and then sell it short. Oil down here. Lock in our profits now. Now we know prices are going to stay high for a while, but you know, they don't have that much higher to climb. At least I hope they don't. All right, let's go to Royal and do the same thing. And Nippon. Now the thing about that is we've got more cash than we have assets. Of course, we have to pay our tax, but you know, that's only going to take us down to like 670, 660. And our net worth has climbed all the way up from what was it, 475 before to 1100. So we could do a major extraordinary dividend to reduce the bank's tax cost basis, and that way we wouldn't have to have such a high stock price to sell it. You know, reduce the bank's investment in it by doing an extraordinary dividend. Or we could try to put this money to work within this company or this industry, or buy additional stocks, subsidiaries, whatever, whether in the same industry or others. You know, we just got all kinds of options now thanks to that. All right, I'm not going to do anything yet, but so we sold them all off. We don't have any positions here. I don't have any positions in it, and Royal Dutch no longer has any positions in it, right? Okay. So now we want to sell it short at 203. And it's actually going to give it to us at 218 at 5 years out. Oh, it won't let us right now. 10 contracts versus 100,000. It's hardly worth it. Wonder how long we have to wait. Oh well. We'll just give it some time and try to do it in the 190s. Maybe they'll let us do it then. Maybe it's while it's above 200 that it won't. I haven't covered corn yet, and it went back up into the $4 range. All right, $4.31 per share, 215 billion. Now, its cash on hand is going to be deceptively high. Why did the market rally? Is the trade thing over? The trade war? This is mine. I want to see the bank. So it's got 3.4 trillion in cash, but a lot of that is cash held by all of our entities, you know, us, Nippon, and Royal Dutch. So it can't really invest all of it. So our earnings report said that we got 215 billion. So that's what I'm going to buy in new loans down here. And judging by these numbers, I bet you we wrote off some loans. Let's look. Well, it wasn't this quarter. It might have been last quarter. But when you do write off loans, it'll show up on your earnings report. There'll be a paragraph right about here that says how much you wrote off. And it looks like we wrote off 80,000 and probably about 16,000 on this one. All right, so let's buy 80. Let's see, what is it? 87,000 on the consumer loans. So that's just too big a number to do in my head. So 222 minus 87. All right, divided by 2. So 87 plus 67. All right, so we're going to buy 134 billion here and 67 billion there. What did we say? 134. No. I did 67. That should be 87. So 154 is what it should have thought. All right, now mortgages. I'm just going to put them all in prime. All right, so we're starting to climb up towards the total on our business loans, but the business loan's about to come down because Royal Dutch is about to pay its loan off pretty much. All right, next up is Royal Dutch. $65 a share. $650 billion. Wow. Okay, so let's see what we owe. 91 billion. So let's pay that off. And its stock is trading at 4 times its net value. So let's find out if I have quadrupled my money or not. So I put in 554. Yeah, I've made 8 times my money. All right, 554. 554. 554. 967 times 5. And they have 10 billion shares. So 277 would have been the target price. Holy cow. All right, I think what I'm going to do is I'm going to sell Royal Dutch and I'm going to start another company. Or I could buy Chevron. That would work too. All right, our oil price has dropped, so we need to short it right away. All right, I'm going to set the ticker to 1. And pause the ticker as well. And let's think about this. All right, let's take these problems one at a time. The first one is the spot crude price. I want to try to short that if it'll let me. Because what's happening is the initial panic over this news, people are getting over their panic, and so the price is coming down. Now, it may stay elevated for a while, but I don't think it's going to go back up. So that's the first thing I want to do. Then we'll deal with what we want to do with our stocks when we get done with that. So let's see what we can do there. Alright, so now that it's below 200 and the panic is over, it's going to let us short it. So let's do that. Oh, no, it's still not going to let us. Okay, well, I don't want to use up one of my... I'm only allowed to do 5 trades of this commodity, and I don't want to do it for 10 contracts. Or do I? No, I don't. Okay, so that takes that problem off the table. Now we got to deal with Royal Dutch Shell, which has surpassed by almost double. Is it almost double? No, well, it's 30% above our target sale price. Now, I don't want to sell this company 100% of it in the condition that it's in today because it's got too much cash. If I sell this company and then re-enter this industry because it's still very profitable, Royal Dutch will be a real problem because I can't freeze his loan, I can't slow him down at all. There's nothing I can do to control him if I sell 100% of him. Now, if he was a smaller company and I tried to sell 100%, the computer, this game would try to find a buyer, a private buyer, to conduct a private sale. But Royal Dutch is big enough that there's no other company in the game that can buy him from me. There's no company that has cash and credit of $4.5 billion to engage in a private sale. So when I sell this, it should go straight to the public. So I think what I'm going to do is I'm going to sell 80% of my stock to take my profit out, and then I will have Royal Dutch do an extraordinary dividend for as much of this money as it can. 20% of it will go to me, and the other 80% to the public shareholders, which will leave him without cash, and then I'll sell the remaining 20%. I won't lose any money in that transaction because I will be taking my money from the stock sale. I'm getting 4 times of this amount in the stock sale, and then some. So I think that's what I'm going to do. I'm going to take my profit right now out of Royal Dutch, and then we'll look at the industry and see about re-entering it immediately. Okay, so let's do that. So go to me, sell stock, Royal Dutch, 80%. And I have to pay $500 billion in tax, but that's fine. 574% gain. Okay, now let's go to Royal Dutch and see who owns and controls him. 80% public, excellent. So now let's do an extraordinary dividend. And it'll actually let me do more than he has cash for, which with a high interest rate would be in our favor. How bad do I want to cripple him? That's the question. Well, his stock price only went down to 407. So let's do the full amount. What do you say, Gordon?
Greed is right. Greed works.
Absolutely, full amount it is. Okay, now when you do a distribution of this size, what it does is it reduces your tax basis. It's considered a partial liquidation, and so it affects the calculate. Where we go to calculate how much what the tax basis cost is. What they're saying is that they're going to reduce my tax basis cost in accordance with this distribution. Okay, so it's fine. Just say yes. When I sell the other 20%, it affects how I'm taxed on it. So, and I'm going to be taxed on the distribution based on the regular income tax rate, which is 31% right now. Okay, but I knew that too, so that's fine. Okay, and now let's sell the stock, the remaining 20%. Okay, so now I have 4.6 trillion in cash and I owe roughly $552 billion in taxes. So let's pay that, $553 billion. Okay, so I have $4 billion to invest wherever I wish. Royal Dutch is not owned by anyone. It has assets of $500 billion and debts of $272 billion. So his credit rating has gone down to BBB, has zero credit, and we're still his bank. So I mean, we're going to benefit from that loan in the bank. All right. So that's Royal Dutch out of the way. Now the question is what to do next. We'll deal with Nippon probably in the next episode because we're getting up close to an hour now. So now I want to look at the industry, the oil industry, about getting back in it. It's only growing at 4%, and we've got companies that are affordable. So he's 12%. That would be 18. And although I really don't want to pay that high a price, I could buy him too for another 3.5%. And all three of them have decent returns. And he actually owns some of these companies down below, so it's going to be even a bigger percentage than that. If you look at, oh wait, what was this message? Halliburton, okay. On the research page, if a company has multiple, well, I guess the subsidiaries he owns aren't that big, but if a company owns a bunch of them, it'll say what his percentage is here, and then it'll say Chevron and its affiliated companies have this much of a market share. But I guess it's subsidiary companies. It only has one, Texaco, and then Texaco owns something else. So Texaco and Kerr-McGee. Does Kerr-McGee own anything? No. Alright, so let's add in. Okay, so 12. And that makes it 18. Texaco is 0.3. Okay, so that's not a big deal. Kerr-McGee is where? Right here. So 19, call it 20. And then we're going to buy any others. If we buy total, that's 23. So that puts us back up in the $500 billion range. Back up at the top, especially if we grow. So let's do that. Let's get right back into this puppy. These guys are growing at such negative rates now that zeros and whatnot. We should be able to do well. All right, so Chevron, we're going to buy it. What's next? Mobile? Nope, somebody owns Mobile. How much of Mobile is owned? 93%. Well, that's too bad. Alright, who else? Total Petroleum. Alright, well, this isn't too bad because, I'm only paying a premium on the equity, so. right, who else? Let's take a look at him. I don't know that we're going to buy him, but let's take a look. That's a big premium to pay. Is he worth it? That's the question. His earnings are going down right now. He's reasonably competent. And he's fairly big. What's the management like at Chevron? Reasonably competent. Okay. Let's add up what we own so far in terms of percentage of the market. So we have 12 here, 15.5, 16.5, 17. So if we buy him, we'll have 28. Yeah, he's expensive, but we're going to do it. Who owns him? Nobody. Okay. We're doing it. We're going to make our money back. All right, and plus, now we own a company in that industry, 100% of them. So we can contribute these other stocks, merge them, give them cash, whatever. All right, so we don't want him to be completely debtless. We want him to have a little bit of debt. All right, first let's buy back our bonds. Oops, wrong button. All right, we got to buy back some more. All right, now let's contribute Chevron and Total Petroleum to him. All right, now let's have him merge, starting with Chevron. And whoever that minority shareholder was, he got cashed out during the merger. So now let's do total. Alright, so 1% went to the public, so let's buy that back. Alright, now let's do Texaco, which was owned by Chevron, so we received it in the merger with Chevron. And now Kerr-McGee, which we can just liquidate. as long as the bondholders don't block it. Okay. So these are 9.25% bonds, and we're paying 10.5. So we have assets of 600, or well, 570, and a loan of 253, and we want a 3-to-1. So we want a loan of around what? So divide this by 4, it'd be 150, 160. So we want to pay down 90 plus the bonds. Alright, so let's buy back that 1%. Actually, since I have the cash, I'm going to tender offer it. And I'm going to start at 24. Okay, that was inadequate. Let's try 29. Okay. Let's try 33. And they accepted at 33. Wasn't that much money, but alright, so how much money does he need to pay it down by 90,000? He needs 88 billion. So let's contribute that. Alright, let's buy back the bonds. And now put the rest toward the loan. Alright, so slightly more than we wanted, but it's close. Well, it's not that close. That's 2-to-1. 2.5-to-1. Let's pay it down by another 30 billion. My math isn't so good today. Okay, so that's 3-to-1. I could just cash this out. This is our hidden reserve. We'll leave it there in case the first couple of months we need to boost our earnings. Alright, so what's the 46 cents going down? Well, no, really going up. Down from last year, but up from last quarter. No, it's not. It's going down. On average, it's going down. Alright, we're reasonably competent. Let's look and see what we need to do management-wise. So here we are. We need to eliminate our dividend. We don't want to sell off assets. We don't need to. We want to grow right at 4%. We're reasonably competent. He's at 6, so let's make ours 8. So that's what we're going to do. 0, 4, 8. Alright, so dividend 0. 8 for the R&D. Growth rate of 4. Okay. It occurs to me we could have just sold 1% of Royal Dutch and contributed the rest to Lukoil. But he's going to go down. That stock price is going to go down. So probably just as well that we took the profit. So what we're left with is $23 trillion. Let's take a look at where we have it all. 18 trillion is in the bank. 741 is in Lukoil. And where's the rest? Is it all here? Oh, my cash. Duh, I have cash. Oh man, all this activity, you forget everything. Alright, the next thing I want to do before we end the part is we're going to cover our corn futures, because it's dropped all the way down to almost 3 1/4 now. So let's cover those, and when we come back next time, we will deal with that surplus of cash that Nippon has and decide what to do with it. And once we have Nippon situated, whether we keep Nippon or sell him or do an extraordinary dividend or whatever it is we decide to do, then we got to find a place to put this 3.3 trillion to work. All right, so let's cover our futures on corn. And you notice the price is going up every time I do this. Or maybe it was just going up anyway. See, there it took another jump. That's part of the reason why you want to do it when it's in the low threes. Or wherever it is, whatever it is your target is. Okay, so all I have left on futures is the silver, which is back down to 15, so we may do a 5th silver transaction if that drops down to 14. Alright, so we're going to call this a part. We're going to figure out what to do with all of this money when we come back next time. Imagine it will take a while. I'll try to get it all done in the one episode. I'm not really sure what's going to happen with Nippon. He's got, 900, well, he's going to have 600,000, 600 billion to either invest or divest or something. We got to do something with it. We don't want it to just sit there. Money's power in this game. So, we made it to 23 trillion. And if we can get that trade war to end, we'll be in great shape to invest pretty much everywhere. So expect to have probably by the end of the next part, probably have 10 or 12 companies under our control. So I'm looking forward to getting there, because while the game is going to slow down, we're going to be growing and growing and growing, expanding our presence all across the market. So come back for the next episode to see that. And until then, this is RakeM saying, have a good one.